think we're live. I think it's working now. So,
Okay. Awesome.
Hi guys. It is Mortgage Monday. I'm
morning.
sitting here with Jake Taylor at Jake Taylor Home Loans and Pilot Mortgage, and we are here today to talk about VA loans. So, you want to say good morning?
Good morning.
So Jake, I hear you're a vet.
I am a vet.
How long did you serve?
I served for 2.5 years, and that was my commitment. So
Okay.
I decided not to re-enlist.
What branch?
I was in the Army.
Perfect.
Go Army.
Actually didn't know that, so now I know that. So, talking about VA loans, how is a VA loan different from like your FHA, conventional, traditional loan?
So the VA loan is different from the for traditional loan, the conventional and FHA and USDA, because number one, the government really wants to take care of veterans who serve their country. So there's no money down required on a VA loan. That's a big deal. So you can buy a house, no money down, up to the county loan limit, which in Maricopa County is $484,350. So vets who want to buy a house right now but don't have down payment saved up, VA loan.
That's huge, because that's the misconception that people need 20% down, and you're telling me zero.
Zero down.
Zero down. And then
So-
FHA, we've got all these different loan limits. We'll hit those at a different time.
Right.
So, how are VA loans backed?
So VA loans are backed by actually the Veterans Administration. So the loan is made by a bank like Wells Fargo or Chase, or fill in the blank with the bank that you know. But the VA tells the bank, they say, okay, we're going to insure up to 25% of your loss on this loan. So let's say the loan is $100,000.
Okay.
Wells Fargo and Chase write the loan for $100,000. They go to the VA. The VA says, yes, we'll insure that veteran. He's on file with us. So so Chase then makes the loan of $100,000 to the veteran. If that loan defaults, then Chase comes back to the VA and says, hey, the veteran defaulted, unfortunately, for financial reasons or difficulties, whatever the case is. And when we sold the house and recouped our losses, we were still short by $22,000.
Okay.
So the VA says, no problem, Chase. He's insured for $25,000 on this particular loan. Here's $22,000.
Just like that.
Just like that.
Wow. Okay.
So that's why it's different. The Chase doesn't have to require the veteran to buy private mortgage insurance,
Okay.
because the VA provides that through the veteran's entitlement.
So there's no PMI.
There's no monthly PMI.
Oh.
There's a one-time upfront VA funding fee
Okay.
that goes into the pot with the VA. So when that does happen, the VA has this pile of money,
Okay.
so that when the loan defaults, they pull out of those reserve funds to pay off the lenders, which keeps the program sustainable and healthy for the rest of us veterans to use.
We're not going to say when it defaults.
If
Unlikely chance
in
that
the
it defaults.
in the
So,
yes in the
if.
in the chance
So-
that they loan defaults.
If I'm right, I'm hearing VA loans are funded like a regular loan. They're just backed by the Veterans Administration.
Correct.
Okay, got it right. I learned something today. So, are interest rates different for veterans?
Absolutely.
Okay, how so?
They're better.
Oh,
VA loan rates are typically lower than conventional rates. They're typically lower than FHA rates as well.
how much lower?
That depends on the market. Depends on what's
Okay.
going on in the mortgage-backed security market behind the scenes. But I don't want to say specifically,
Okay.
but it's definitely an option that the veteran really wants to pursue,
Okay.
to understand everything that goes on with the VA loan, how it works before they make a decision.
Okay.
I have a VA loan on this house.
Okay.
And
We're at Jake's house, by the way. We're in his backyard. Okay.
I have a VA loan, and I had lots of choices, and I chose the VA loan because it was the best at the time, even with the down payment.
Okay.
So
So that's my next question, actually. Why would a veteran choose to go VA over, say, conventional?
okay, so the veteran wants to choose to go VA over conventional for lots of reasons. Number one, the underwriting guidelines that the VA puts in place for VA loans are very liberal. So imagine this being a box of VA guidelines right here, okay?
Okay.
So these are the VA loan guidelines. There are lenders that take those VA loan guidelines, which are very liberal. They can have the veteran can have a higher debt to income ratio, the veteran can have lower credit score,
Okay.
and lower, not as kind of a spotty work history possibly, and the VA will still fund that loan. They'll still insure Chase or Wells Fargo, those other
Okay.
banks, okay? So now when the loan goes to those other banks, some of those other banks put on bigger underwriting boxes, bigger underwriting guidelines on top of the
That
very
box is bigger than that first box. True.
Exactly.
Okay.
and those are called lender overlays,
Okay.
which makes the VA loan a little bit more difficult to achieve with some lenders. We work with lenders that don't put any of those overlays on the generic VA loan guidelines, so it makes it very easy for a veteran to get financed. So you have easier overlays, or easier to get the loan, and they're less expensive than the standard conventional loans.
Perfect. That actually reminds me, we just closed on a client last month, I don't remember, who
Yeah.
he was a veteran actually. He came to me and he had actually saved about $10,000-$15,000 ready to buy a house. I sent him to Jake and he actually called me. He's like, Chrissy, I don't have to bring $1 to closing. He got all of his earnest money back. How did you do that?
That's a great question, and I love talking about this. It's the no cost VA loan, right?
Okay.
So a no cost VA loan, so what costs are there normally on a VA loan? I'm sorry, not on a VA loan, but what costs are there on a loan? So you have, what types of fees are there?
Oh my gosh, I see all the lines and I don't know what they are, so.
So there's the lender fees, right?
Yes,
the lender
there's
typically
one.
charges like an underwriting fee and a processing
Yes.
fee, maybe an appraisal, and then the title company
Has their fees.
which on a $250,000, $300,000 loan typically are in the $1,800 to $2,000 range, wouldn't
Yep.
you say? And then the veteran's required to put into an escrow account with their loan, taxes, title, insurance, so that the veteran doesn't have to pay those fees when they come due. The
Okay.
lender just pulls from those accounts to pay the taxes, pulls from the
Okay.
account to pay the insurance company. But the veteran has to bring those to closing.
Okay.
So in this situation, I put together a loan estimate. I don't know if you guys can see this or not.
You can.
So at the bottom, it'll show cash to close. Oops. I don't know if this is going to work out too well. But it's zero cash to close, and actually showed a little bit extra left over because
I can verify, guys. It says 0.
it says 0. And so when you look at the loan estimate, these are the fees that are charged to the veteran as third-party fees, the title company to the lender, to the appraisal.
Okay.
And then on this side of the loan estimate, these are prepaid taxes, insurance, and interest. There's like a recording fee to record the loan, and so on and so forth. And in this particular scenario, there's actually in box J what's called a lender credit. And in this case, there it is right there. It's $4,469, and that exceeded the actual cost of the loan of $4,102.
Okay.
That's not anything. Well, it has something to do with the way that I operate as a mortgage broker, but it also has to do with the fact that on VA loans, the lender provides the veteran the option of taking what's called a par interest rate, where the veteran would actually pay those fees, or the seller would pay those fees, or in a case where the seller is unwilling to pay those fees and the veteran would prefer to not pay those fees, the lender says, look, if you take a slightly higher rate, we'll give you, in this case, and this is not a quote, because I have RESPA and INTILA guidelines and TRID guidelines to talk about. I just want to make sure this is not a quote. But in this particular scenario, for example, the lender provided a lender credit
Okay.
at a particular rate of over $4,000 to pay for the veteran's fees.
Whoa. So they didn't have to bring anything.
So not only did they didn't bring anything to closing, but he received a refund of his earnest deposit,
Okay.
right?
Yes.
So he got all of his money back that he put in, and he's with the lender now and getting ready to make his first payment, and it was a wonderful, wonderful deal.
And that's such a surprise too. I can speak for my client alone. Like, he was so surprised walking in and hearing that he didn't have to bring any money to close, and he could use that money towards, the house, the furniture, all those costs that come after you close.
The curtains,
So the curtains,
dish mats.
Yes, I don't know if it's dish mats.
The not so fun
But,
things that you
yeah,
gotta buy.
all
right?
those things. So for him to show up, that was really great for him. So I don't think a lot of people know about this. I don't think a lot of clients, veterans out there know that this is available to them. Would you say so?
I would say it's becoming more popular now, especially with social media, and everyone's got phones in their pockets. They can research and go.
Yeah.
But if you just do a Google search for no cost VA loan, you'll see and go to the videos, you'll see some loan officers talking about the no-cost VA loan. And I'll also give you a link to, actually it's called the Consumer Finance Protection Bureau,
Okay.
which is they're the government agency, the watchdog that makes sure that us mortgage brokers and bankers tell the truth and that we're,
Okay.
truth in advertising and things like
Yeah.
this. But if you go to their website and say no-cost loan, they'll tell you that yes, there is in fact a no-cost loan. And this is how it works. It's not like it's a free ho ho ho, Merry
Yeah.
Christmas, there's absolutely no fees.
Yeah.
It's just that they can select a rate that covers those fees
Okay.
in that scenario.
Yeah. But it's a huge benefit. It's something that we just don't commonly know about, like when we think veterans, when we think buying homes. So really love that we talked about this today. Really love that Jake does it. And really, I can tell Jake has a passion for doing this kind of stuff for our veterans. So if you know anyone that could use this information, or you know a vet, or anyone that's looking to buy a house, wanting to use this no-cost VA loan, don't quote any of the rates that Jake said today, but you can contact him and then get that information from him and see how you can get into a house with no money down. So you can buy dish mats, right?
Dish mats and
Curtains, rugs,
shower mats,
stuff that makes you super excited.
stuff that you don't think about, but
yeah.
you need.
Yep. So thank you guys so much for watching. Anything else?
No, thanks for having me on the show.
Perfect. Thank you. We'll see you guys again soon.
Talk to you
Bye.
soon.